What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a little end of the week short interest and utilization update from Ortex. And again, we're going to be going over just how accurate some of the information that we are seeing actually is. Then going into next week, having it being the week of earnings, we are going to take a little bit of a look at the options chain, just kind of seeing if there is any potential at the current time for a little bit of a gamma squeeze. Now, the two main things that I really want to get across in this video is one, there are more big margin calls going out right now. We're going to be taking a look at this organization who is doing essentially the same thing as UBS, the organization that we talked about in the previous video. And this is definitely something that we need to keep a lookout for with everything that's going on with Russia. Now, in addition to this, we also have the SEC releasing some pretty crazy news. Gary Gensler recently made a statement about short sale and short interest reporting in these new rules that are going to be coming out to essentially make that market more transparent. So we're going to go over that as well. Now, the last thing we have to touch on is Elon Musk looks like he's really fighting and his views are in line with the apes' cause. We're going to be taking a look at that as well. But before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn it. If you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you've seen it all of last week. You saw the 700% plays on Friday, the 200% plays, the 100% plays with 1348. You guys got to learn the strategy. So if you do want to learn that 1348 EMA crossover strategy, make sure you click on that link down below to join the free part of the Discord if you want to learn. But if you do want access to the private live streams Sunday and Monday, make sure you consider signing up for the premium version. So AMC right now, $17.66 at the close on Friday. Down 2 cents, 0.11%. Now, with the overall market having a pretty solid day, a lot of us were expecting AMC to trend a little bit higher. But when we think about what actually happened with AMC over the last couple of days, when we go back to the 22nd on Tuesday and you look at the price about that AMC opened at $17.38, we were slightly green on the week going into earnings, but there's a lot of volatility. So again, not too much of a crazy week, pretty flat and nothing really to be all that concerned about. Now, when we come over to the Ortex data, 100% utilization supposedly, and then the average cost to borrow that we're seeing here is 1.46%. Now that number is staying very, very, very stagnant. This is not moving up. It's coming down a little bit some days and then coming back up to that 1.46% average, but with 100% utilization, you would expect to see that cost to borrow really start to step up. So again, I'm in the boat of the 100% utilization just doesn't seem accurate right now. Now, the estimated short interest that we're seeing is 20.35%, and I know you guys have seen those numbers where we were at 21%, but the exchange reported short interest came out down here. In Ortex on February 15th was overestimating a little bit AMC's actual interest or actual short interest on their platform. So they do have to make a couple of adjustments. So 20.35 is the current best guess estimate. Now coming over to this Max Payne site over here, Swaggy Stocks, we have Max Payne going into this next week currently at $17 a share. With earnings coming up though on March 1st, a lot of people are probably going to be gambling on options. Me personally, I'm not playing AMC's earnings because that would essentially mean I would have to buy puts on it as well because I like to play earnings both ways. But you guys can do anything that you would like to do with your money. In Max Payne, this number is most likely going to change significantly. Now, coming over here on Stonko Tracker, again, nothing too crazy on the options chain as well going into next week. It's a weekly expiration date. It's not a monthly. But again, with earnings, we could see it start to freak out a little bit. Now, let's get into this margin call situation. So originally, at one point last week, we saw this. UBS triggers margin calls as Russian bond values are cut to zero. So they essentially said, hey, we are not going to be accepting these Russian bonds as collateral anymore. We view them as one, super high risk and potentially worthless at the current time, so they cannot be posted as collateral to lever up any portfolios. What this ends up causing is a massive wave of margin calls. Now, in the last video where I was talking about this, I was saying you need to watch out for any other institutions that are going to be doing the same thing. Now, we did kind of start to hint at Credit Suisse being the next one because of the last situation that they had with Archegos, but we're going to get into that in a little bit. But right here, Credit Suisse joins UBS in cutting lending against Russian debt. Credit Suisse Group AG joins UBS Group in PICTET in slashing the amount it will loan private banking clients against Russian debt as the U.S. ramps up sanctions after the Ukraine invasion. Now, when we're thinking about this right here, these margin calls, it all is going to depend on how cheap this debt was and essentially what the almost haircut or the percentage of the value of these bonds that these institutions were able to post as collateral to Credit Suisse. Usually for like a U.S. Treasury, you could post like 90% of the value of that bond as your collateral. But we'd have to kind of see what that percentage is for Russian bonds. Now, if we start to see a widespread liquidation margin call, which again is very, very possible, and here's why. Credit Suisse is the key institution here. When they had their situation with Archegos, they let Bill Hwang start to kind of get a little bit too far into his leverage. They would essentially, if you read some of the reports on this, Credit Suisse would call Archegos and be like, hey, this is margin call. You're going to need to pay us a little bit more money here. And Bill Hwang was essentially like, no, I'd like to actually get more leverage on these positions. Now, hopefully, Credit Suisse has learned their lesson here and isn't going to allow their clients to really heavily over-leverage themselves, and we could see a widespread range of Credit Suisse starting to protect themselves and just liquidate positions to make sure that they are not going to be on the hook for more multi-billion-dollar losses. So this is an interesting situation that we have folding out right now, and we're just going to kind of have to wait and see if more institutions are going to start doing this, but they most likely are. Now, let's get into this situation at the SEC, Gary Gensler, and transparency. So a lot of people have been talking about transparency in our market, specifically the securities lending market. Now, in my opinion, again, it's just my opinion on this. I don't think any of these new rules that are coming out are really going to cause any significant price movements in the stocks that we like to talk about all the time, AMC and GME. But what this can do is get us on a nice little track of really increasing transparency in the overall market. Because again, a rule is only going to be as good as how well it's enforced. And as we've seen in the past, the SEC hasn't necessarily been very good at kind of enticing these institutions who break these rules to not break these rules. So when we can see here, today the commission unanimously voted to propose rules and amendments to broaden the scope of short sale related data available to the investing public and to regulators. This is very interesting. So when we see right here, proposed Rule 13F-2 would make aggregate data about large short positions available to the public for individual equity securities. So we would essentially be able to see, it looks like who is short and how many shares that they are short in any given security. Well, right now, this is kind of what we're fighting for. We have no idea who is actually shorting AMC. A lot of people think it's Citadel, but again, the Citadel is really creating these naked shorts on their market-making side. It doesn't make a whole lot of sense for their hedge fund to do this. And again, there's no naked short button that the hedge funds can push. It really all comes down to the prime brokers, the banks, the Goldman Sachs's, the Morgan Stanley's, JP Morgan's, allowing this to happen. But when we can see exactly what these institutions are doing, well, this is a really, really solid step in the right direction, but it's not 100% of the way to market transparency. Now, when we think about the actual effectiveness of these rules and what this is actually going to do with our market, this rule by itself, yeah, it might give us a little bit more insight, but when combined with this next rule that we've talked about many, many times in the past, that is honestly my favorite proposed rule change that I have seen ever, well, that is really going to be a solid step in the right direction, and that is FINRA 2119 right here. And when we come down a little bit further, we can see that what we would essentially be able to see is synthetic short positions. In addition, FINRA is considering requiring firms to reflect synthetic short positions in short interest reports. For example, enhanced short interest reporting could include synthetic short positions achieved through the sale of a call option and the purchase of a put option, with the options have the same strike and expiration month, or through other strategies. So this rule, combined with more actual short interest reporting over on Gary's new rule over there, well, that would put us in a really, really solid spot in getting more transparency in the overall market. And speaking about transparency and this fight for market transparency, we have this right here that came out. So Dave Lauer, really, really trusted source of information on market structure in the AMC community, in the APE community. The SEC just proposed a new rule requiring short sale position disclosure and a modification to cap reporting of buy to close orders. Now, he goes on a little bit further, but Elon Musk is replying to Dave Lauer's tweets now, which is absolutely awesome. Would be a good move. Needs to include put options and synthetic shorts. When we have somebody like Elon coming around and starting to kind of trickle in and start to kind of join this fight for market transparency, well, we don't really know where this can end up going. Elon has a lot of money, a lot of influence, and a lot of power. So if Elon can actually come in and make a difference in this situation, I think he could be the person that could really kind of turbocharge our fight in market transparency. So that is mainly going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you guys in the next video.